person we have to hear are the FII investors. And as you said, I have with me Mr. GOKUL LAROIA. He is the CEO of Morgan Stanley Asia Pacific. Also, he heads the institutional sales desk and wealth management at Asia Pacific Morgan Stanley. Gokul, thank you very much for joining us. You know, we have seen the market surge, of course, a good 20% in the last, 16 weeks or so, the last 4 months. But as you got to that 7,000, 7,500 mark on the Nifty, there appears to be a waning of interest. I mean, even yesterday, the Sensex saw a 450-point gain, and yet the FII buying was negligible. What is your personal view? Do you think that you know, there is a strike at higher levels, there is a fear of valuations at current levels?
I think this happens quite often. When Abenomics started in Japan, you saw a big move up in the markets. And these big moves up are very often because people are underweight a country and they're just trying to get equal weight, and they go in to make sure they're not left behind. But I think it's good that the market consolidates at these levels for a period of time, because in many ways what we've seen is a beta rally. And this then needs to move into single stock picking, which is going to happen. And our view is that India is probably on the cusp of a secular bull run. So I'm less concerned about the market being at 7.3, 7.4 for a period of time. I actually do think there's a lot of factors that are now increasingly in place that could cause this market to be meaningfully higher on a sustained basis, perhaps not on as rapid a pace as it has been over the last 16 weeks or so, but we're much more focused on where this market is in the next 12 and 18 months, and again, we're unambiguously positive.
Oh, that's nice to hear, because when you started off with this comparison with Abenomics, it was a bit of a scare, because we also saw that rally petering out suddenly and swiftly.
Although it petered out after a 60% gain. I'm sure a lot of people in India will be very happy if we had a 60% move.
Exactly. Now, do you think there is the wherewithal for that? When do you expect the next big move of, say, 20%? Will that happen in the next 12 to 18 months?
So when I said we're positive, we're also very hopeful. And I think the translation of hope into money flows is really a function of what happens post this amazing political mandate that's been given to the BJP.
This consolidation period, what are investors waiting for? Do you think the next step will be taken after the budget or after some bunch of actual announced reforms? When does the consolidation break up?
I have a very strong view that what's held India back over the past 10 years or so has been lack of any form of transparent, consistent pro-growth policy making. And if you think about how that's translated into lack of activity, all you've got to do is look at investment to GDP numbers. And those fell from 25% of GDP to 15% of GDP. Private investment was even worse. And I think what really needs to happen is change in policy making that encourages investment. And that really is the hope. And if that materializes into something tangible, which we're all very convinced that it will, I think you're going to see a lot more money come into India, and we're going to see this market move steadily higher.
Gokul, let me just go back a little and look at the macro picture. 2013 was the year when, you know, the US market saw excellent flows, and the only Indian stocks that did well were the tech stocks, those that were exposed to the US, so to speak. Have you seen any reversal of that aversion for emerging markets? Have you seen any kind of flooding towards emerging markets, or are you likely to see it?
Emerging markets have suffered, and I think emerging markets have suffered over the last year and a half or so for two reasons, absolute reasons, because each of these markets faces structural reform issues that are actually pretty significant. And as a result, we've seen slowing growth in these markets because the growth models that they relied on, including India, didn't work anymore. So these growth models need to change. That takes time, and till that happens, money won't come back in a flood. The other reason is, as you point out, the US was a terrific performer. Japan was resurgent last year. So on a relative basis, there wasn't a lot of reason to put a lot of money into these markets. We think that that's at an inflection point now. But again, I'm a little hesitant to say that that's going to happen across emerging markets. I think you have to make these decisions on a market-specific basis, which is another reason we love India, because the catalyst in the form of the election has occurred, and there's a real foundation that's been laid for a sustained move higher.
What's the pecking order in the emerging markets itself for you?
Well, you know, we like India, we like Indonesia. And again, the reasons we like them are not that dissimilar. You know, large, young populations, so the demographics play a very important role. And to the extent that you put a reform overlay on these demographics, you know, the result can be absolutely first rate. We think China's an attractive valuation opportunity. The reform process in China is more complicated than it is in India, and it's beginning now. It's going to be a function of how it evolves over the next few years, but we're positive China as well.
Okay. Well, let me come to the kind of money that we have seen so far. Would you have any idea, has it been largely hedge fund money which is now taking profit and going away, or at least booking some profit in India? Have the long-only funds at least put their feet in, or are they pretty invested?
It's been a mix, but it always is a mix. I think what's important to point out, though, is that the dedicated money has come in. Whether it's emerging markets dedicated money or India dedicated money has come in. I, for one, don't think that the hedge fund community globally is over-invested by any stretch in India. The other pool of capital that's not fully invested yet is global funds. You know, these are funds that have an allocation to emerging markets. They can choose to use it or not, and they can choose to use it depending on the market they like or not. And that is a very large pool of capital that is underinvested at this point in time. So, you know, there's a lot more money that can come in. The money is not what worries me. Actually, it's the ability to buy India in size that I think is somewhat constrained.
Why would you say
in terms of free float available? FIIs already own over 70% of the free float of the economy. So what we really need to see is increase in new issuance activity or additions to the market cap. But again, if we think that this economy is going to grow at between 6 and 7%, which we at Morgan Stanley certainly do over the next 5 to 10 years, there will be a lot of new paper that needs to come to market because the growth needs to get funded.
Okay. So what kind of new paper would you like? We already saw two young private sector banks issuing paper, Yes Bank and Kotak. One divested, one issued new equity. Would you like private sector banks? Public sector banks need capital. If they came, would you buy?
If public sector banks came and did a true recapitalization, I think it's a good opportunity to buy. I think private sector banks will need to raise capital. Again, if you have an economy that's growing at 6 or 7%, credit is going to grow at 15. If credit's going to grow at 15, banks will need to raise capital. And there's nothing wrong with that because I think banks can then deploy this capital at an ROE accretive rate. So banks will raise capital, but the other area that has seen no capital raising, and again goes back to the point in policy, is infrastructure. Very capital intensive, and the policy framework has prohibited investment in many ways, and to the extent that that changes, we'll see a lot of capital out of infrastructure, and I think people would be very keen to participate, assuming there's an environment in which you can predict your returns.
Okay, one of our favorite questions which I have to ask you is, guess a nifty level for us 12 months from now, 24 months from now. I mean, if it's 10% higher, it would be what, 8,200. If you expect it to be 20% higher, we would be at 9,000. When do you see that?
8,500 and 10,000.
Between 12 and 24 months?
Between 12 and 24 months.
Oh, that's 10,000 is not a number I've got. On that very positive note, Gokul, thank you very much for joining us. Have a great conference out there.
Thank you very much, sir.